Here we are, talking about Pennant Park. Now, I'm not saying this is investing advice. I got this stock here during COVID. So for me, it was a good deal at the time based on what I was assessing. Right now, you'd have to do your own due diligence, see if it's something that you want to buy. But I want to talk about the success I've had with it thus far and some of the things I looked at. So whenever I hear about a company, through my brokerage, I use Robinhood. If you click on any stock ticker in there, it gives you a basic synopsis of what they do. And sometimes I like to go a little bit further because I don't really like secondhand information. I like getting information direct from the source when I can. So I said, let me just Google Pennant Park. So when I Google Pennant Park, it comes up. I find their website, right? So I get to their website, and here I looked at some information about their portfolio, right? Because I want to see what they invest in, how they do it, what their strategy is, you know? And now this isn't a full in-depth everything about them, but it's going to give me a little bit of information about what they do and maybe help me give a better perspective, right? So let's see. They want to do invest in companies with attractive margins, low capital expenditures, demonstrated by ability to sustain growth through the business cycle. Okay, so that's what I want to do. These are some of the companies, I guess, that they invest in. Let's look at their strategy. I want to see what their approach is. So for their approach, they make selective investments in companies backed by middle market private equity sponsors. All right, so they go off across different segments, and basically they're a business development company. They give money to businesses to help those businesses grow. To see a little bit more about what they think of that. Oh, here's some, because the industry. Diversification. So here's the different industries they're in, right? They got aerospace, to wholesale, retail, financial services, food and beverage, pharmaceuticals, business. So they have a wide range of industries that they cover in what their investments are into. And in a given deal, they expect to invest between 10 and 100 million across a business. So they're helping scale businesses with big dollars, you know? And you see across all these different industries, in my opinion, if you think about COVID, for example, everything was shut down, right? But during that time, there were some things that were considered essential employees, and those essential places were still working. Aerospace and defense, I don't think that stopped during COVID. Building materials may have stopped. Building and real estate, as we know, there's been some booms, so real estate has kept going. Business services, could have been here or there. Virtual stuff they could still do. Chemicals, plastics, rubber, certain things like that were still going. We still needed textiles and things to make life happen. Distribution was happening big. All of the shipping companies were doing extremely well during COVID because people were at home. They needed essentials brought to their home. You have people in grocery stores, people work for Amazon, people work for FedEx, for UPS, you know, all that stuff was happening. Education and childcare maybe didn't do well as well because people weren't in school. Kids were at home, they're doing virtual learning. So actually, some of them probably did do well, you know, signing up for virtual programs and stuff like that. So you can see and sort of think about these different industries they're involved in, that they probably still continue to do well during COVID. And when I looked at this in the past, I said my prediction was they're going to continue being able to make money because even though some industries will be affected negatively, there are others that they're in that will still continue to do well. Another part of what I look at, or what I did look at that I really wanted to share today, was mainly about the growth of dividends, right? I wanted to find an example, a real life example to tell people like, hey, this is how dividends can grow for you and how I have a set amount of money that I put into this stock. I haven't added more. I didn't keep adding more to the stock. I just bought a certain number of shares, have them. In that time, I bought them back around September of 2020, right? So during that time, they were paying 12 cents per share in their dividends. And if I scroll back a little bit more in their history, they had been growing since 2007, right? So you had a couple years, 2007, 2008. They went from 22 cents a share to 24, 26, 27, 28. They were continually starting to pay more per share until 2016. Oh, wait, no. Yeah. Until 2017. I would have got mad. I'd be like, man, I was getting 28 cents a share and I'm getting 10 cents a share. They took like 10 cents off what I'm earning. But then over time, it looked like they were going to potentially have opportunity to grow that again. COVID happened, drastically took them down to 12 cents a share. So COVID happened around March. They pay quarterly. So March, they probably just paid what they were normally going to pay. But then by June, they were like, heck no, we can't afford this. Things are happening. Things are shaky. We don't know what's going to happen in the world. So they started paying a little bit less. Now, my theory was in the future, they had potential to grow. And I'll show you some reasons why I thought of that in a minute. But basically, over time, they were paying 12 cents a share, right? December 2021, or in March, they started paying 14 cents a share. Then they started paying 14.5 cents per share. Then 15 cents per share. And most recently, unexpected, unbeknownst to me, in December, that was an ex-dividend date. So let me explain it real quick. Ex-dividend date is the date you have to own the shares by in order to receive the dividend. The cash amount is what they're going to pay you, and the declaration date is the date they told the world that they're going to pay that amount per share. So November 16th, they said, hey, everybody, we're going to pay you 16.5 cents per share as long as you own shares of our company before December 16th. We're going to record that you own it on December 19th, and we're going to pay you on January 3rd. So January 3rd, I did get a nice little fat check. Not really a check. It's just more money that goes in my brokerage account. But either way, it came in there, and I was like, wow, this is unexpected. I got a raise. I did nothing, and I got a raise. Currently, their dividend yield says about 11%. So you take the price of their stock currently, which isn't showing on here, but the price of their stock currently is about $5.68, and you divide that by the total dividend you would receive in a year, which is about 66 cents. And then when you do that math, it comes to about 11%. So say you're going to earn about 11% yield on what you purchase on this stock. What I liked is the time I purchased the stock back in the past, 12 cents, I was earning a lower yield. I didn't put any more money in this stock, but now I'm earning a higher yield in time. So I did a little bit of math. I'm going to pull up a spreadsheet just to show some examples of how this began to grow, right? So they were first paying 12 cents a share. That's what I first got, right? When they raise it 2 pennies, 2 pennies doesn't sound like a lot. I was like, man, I was getting 12 cents a share. Now I'm getting 14 cents a share. Literally 2 pennies. But if you do the math, that's a 14% raise annually just for holding that stock and having a bunch of shares and getting paid per share. The next year, they went up another half a penny. That was over a 3% raise. You can see the difference of 14 to 17. And then when they went up another penny and a half to 16, that was a 25% raise from the original 12 cents that we had put in. And now at 16.5%, I have almost a 27% raise on the income I'm going to receive from this company annually. And I did nothing but buy their stock and hold it. And as the company continued doing better, they said, hey, we have more revenue, we're making more money, we're being more profitable, we're going to give more of this back to our shareholders. I bought it at a super low price point, and then over time as it grows, I have that capital growth where the stock is worth more than what I paid for it, or maybe about the same. I'll check it in a minute. But then the cash flow I'm receiving from this continues to grow, and I did nothing else but just hold on to the stocks that I purchased. That's why I love dividend paying stocks, because basically I'm getting a free raise. I got a free 27% raise in less than a 2-year time period, and all I did was buy something and hold on to it. That's literally all I had to do. There's a little bit more to explain about dividends to give you, more of an insight on how they work and all that kind of stuff, but that gives you the basic synopsis of it. I mean, if I look back at this stock on the charts here, so back to 2020, this is around March, right, when it went down. It went down to $2.59 per share. If we go closer to when I bought it, around, September, about $3 per share is what I was buying this stock for at the time. So now it being up to about $5.68 per share, I already have capital growth. Now, to be honest with you, just tell you my portfolio, what I did. Later on, when I saw it growing, I predicted it was going to continue to grow more. So I put another lump sum in around here, around, maybe not January. Somewhere around this last quarter, around that $6, $7 mark range, I put a little bit more money in. So my average is actually a little higher than this $3 or so that it was back in September. But the point is, I got the shares, I just sat on them, and then they grew in time. Now I can give you more information, in-depth analysis on how you look at all that and what you want to factor in and look at. That's all going to the investment course. But basically, this is an example of how you buy something, you hold on to it, you don't let go of it, and they keep paying you more. I mean, what else can you ask for? It's a free raise. I don't know any job that will give you a 30% raise in 2 years. So all I did was work at my job, get paid my money, live my life in a budgeted lifestyle, put money aside to invest, put it somewhere, and now my investment money is growing faster than the money I make doing my full-time job every day. In a nutshell, this is what's going to get people financial freedom. And more people need to know about this. That's why I'm sharing it. Hopefully you liked it. Like, subscribe, do whatever you want to do. Berate me about the video. You hate it. You hate the background. I'm in my